people trust Bitcoin. So when you say now you can have asset tokenization on Bitcoin, that these assets can trade against Bitcoin too, that immediately starts, oh, tell me more.
Binari, welcome.
Hello, Isabel.
To Dubai. This is my first time in Dubai, but you are a regular.
Yeah.
Okay. You live close by.
Yes.
I am so excited to continue our chat. This is the second appearance of yours on Bitcoin Rails, so thank you for doing this. To get the BRC20 update, a lot has happened in the past 6 months, maybe, since we last spoke. I don't know when we met.
September it was.
September, and we're now in near February. So actually not that long ago, maybe 4 months, but a lot has happened in the past 4 months for BRC20.
It's been one of the most dense months of my life.
Oh my God.
A lot of learnings, a lot of teachings, a lot of inner growth, let's say, to be able to hold all of these stuff together.
You're leveling up as a CEO.
Yes.
So I'm very excited. Okay, so let's position ourselves. The last time we spoke in Istanbul, the 6-ticker BRC 2.0 module had just dropped. I mean, it was like literally, I think we spoke 48 hours after the drop.
Yeah.
How have things been going with BRC 20 post BRC 2.0 and the programmable module?
Yeah. So this BRC 20 phase 1, the 2.0 protocol, went live on mainnet in the beginning of September. And for us, we thought that it was going to be like a relaxation because, okay, now we put it on the mainnet. Oh my God, it was the opposite.
Of course.
Rocks happened. I get 100 messages a day. People want to do things. There's drama. There is like communities forming and everybody wants to do something.
Was there an ecosystem explosion when BRC 2.0 drops?
The thing, like for us, we were like, okay, we're going to launch the 2.0 on the mainnet as BRC 20 phase 1.
Mm-hmm.
And we didn't expect attention much.
Why not?
I mean, we didn't expect that much attention, let's say.
Okay.
Because it was like we understood later that a lot of people had a lot of expectations because we've been talking about this stuff. Like good trading interfaces, like a lot of like different stuff. But it was like a lot of sophisticated code shipped. But for products to form on top of it, there needs to be time. I take that as one lesson, expectation management. We failed at expectation management.
You want to share a little bit more specifics about that?
Of course, like people expected that like once it goes live, there's going to be this, we were talking about this like sequencer powered AMMs and like all these, like whatever you can do on Ethereum or Solana, you can have those. So people were like, okay, it's launched. Where are my apps?
Right, immediately.
Yeah, there were like couple streamers, for example, in the launch date with like couple thousand viewers even, like they were streaming, and there was like a big, like we lost significant momentum, or like let's say we could have kept much more significant momentum
had you had
if we did some things differently. But when I look back, it's kind of technically infeasible. So whatever happened. But anyways, there was a lot of emotions included because some communities raised like couple $1 million. Like the Adderels community raised 15 Bitcoin to be put into liquidity pool. And then there was a lot of like, we got a lot of hate too. like we launched a very significant upgrade for the BRC20. And then we got a lot of hate on top because people were like, why are you delaying the AMM? Why are you delaying the AMM? Like people wanted a good trading experience.
Fair.
Like that's when you think from the community or individual users' perspective, not actual institutional interest, but end user interest. People want a good trading experience.
Immediately, right out the gate.
We delivered a trading experience that was better than BRC20 and Runes trading.
For sure.
But it was still way below what we have on Solana and Ethereum.
Were there other, I mean, we'll talk about Adderels in a moment because they kind of got a lot of attention for various reasons, but were there other kind of notable projects or kind of communities that come to mind around this that, really kind of hit this new wave hard?
The biggest hitter was the Adderels, and the other ones are like now there are new names coming up. For example, one of my favorite teams is the Yuzo team.
Okay.
Like they keep shipping things and people started to use it a lot and they have like good traction. There are a couple other projects that we're collaborating with, but it's not more like a community project, but those guys have ties to many institutional investors about real world asset tokenization on Bitcoin, etc. That's not a public thing going on, but there's a lot of momentum growing on tokenizing assets on Bitcoin.
When you say these projects are shipping, like what kinds of things are they shipping? What kinds of things are people doing with BRC 2.0 and leveraging right now?
Yeah. So I also need to talk about, like, give credit to Subfrost team, for example.
Shout out to Ray.
Gabe and Ray. They're also Ray also is the main architect of the Alkanes protocol. But they feel a very significant need in the BRC20 ecosystem, which is being able to use Bitcoin in BRC20 and 2.0 smart contracts. So they provide this like decentralized wrapping, unwrapping service, basically.
Amazing.
But in a very good way that from the user experience perspective, it's like seamless. But
they facilitate trading between Bitcoin and Bitcoin native assets, essentially, like seamlessly.
Yes. And we also respect them a lot because technically they are a very sophisticated team. There aren't many teams that are well-versed both in EVM and Bitcoin.
Very few. It's basically the two of you, as far as I'm aware.
There are a couple other teams.
Handful of others.
Yeah. Like Yuzo team, they're like much less experienced, but they are learning fast and like they're also doing a lot of things. And there are many teams that works on Bitcoin and does EVM things, but not yet with BRC20.
And
Not yet.
Yeah. And most of the user demand, I mean, we can talk about this a little bit maybe later, maybe I'm skipping ahead, but you said most of the user demand is happening in China. Are most of these teams also Chinese teams?
There are Chinese teams. There's the CatSwap team. They deployed the first on-chain swap for BRC20. And then there's the ProBTC team. It's another Bitcoin wrapping service. But these were like the first products that shipped on mainnet with 2.0. People kind of didn't like it because when it's 10-minute block time, sometimes that goes to 40 minutes, especially when you make a transaction, it goes to 40 minutes right away.
But this is still a good example of like projects that are building, right? They're not, because I think a lot of people, they still think about Bitcoin native assets, and maybe if they're not super familiar with 2.0, they do just think of like token creation, right?
Yeah.
Like just the creation of assets. And so it's sort of interesting to think about like, well, what can you do now with Bitcoin native assets?
Yeah. So the 2.0 upgrade is essentially introduces EVM smart contracts. So essentially, you can do a lot of things with it, including these swap applications. But 10-minute block time introduces a lot of complexities, especially for DeFi applications. It's not going to work with 10-minute block times. However, because of EVM, like you can do a lot of things, and my personal interest has been hybrid approaches with rollups and smart contracts.
Oh, interesting.
So essentially, our BIS DEX the DEX we launched, the AMM, is kind of like a hybrid rollup that leverages BRC 2.0.
Okay. Explain that. Like, how is it roll-up-y?
It's similar to a rollup. Okay. But like the point is, this 10-minute waiting block time trading, that's not going to go anywhere.
For settlement. Right?
In general, in DeFi.
Sure.
Like token buying and selling, like one of the biggest use cases of
Sure.
crypto.
Sure.
I mean, maybe it's different if you're like buying a share in a house. 10-minute waiting time can be okay, but the user experience on Ethereum, on Solana, like we got used to it. It's beautiful. So people are not gonna go back to 10-minute waiting block time for their operations, to execute their operations. So there needs to be like a different approach.
So, and just to like drill in for 1 second on like how that works for folks who might be curious. You say it's like a roll-up, which, I mean, to me that like sort of insinuates that, okay, the data is being published and essentially settles on chain every 10 minutes. But within a 10-minute block at the indexer level, you have like intra-trading activity. You have trading activity happening,
yes.
Intra-block trading activity.
Yes, exactly. So the approach we took, maybe like the first version we released, the BISDEX, it was like fully smart contracts and no sequencer, no roll-up approach. So it was like very similar to Runes trading or BRC20 trading. But because we had smart contracts, there is no more UTXO splitting or transfer inscriptions, or like if there's like we had an order book, but just the sell side at the initial version. So it's much more closer to like a CLOB trading style, a slow version of it. But people still didn't like it because it was very slow, and creating an order tank takes 10 minutes. Filling the order takes like a 1 block. If you want to change the order, it still takes time. But it was fully on chain. Like you can't close it. Like we can't close it. We can just close the UI. But if someone still wants to use that product that we put on chain, anybody can use it. So it's a decentralized DEX that's going to live on Bitcoin forever. But after we released the AMM, the usage just went like not to zero, but
well, it's like not relevant anymore.
Not relevant anymore. And we're going to retire it, and we're going to introduce more improved trading experience.
And so this sort of intra-block trading that happens at essentially the indexer / sequencer level, that will be available when?
It's live.
It is live.
Yeah,
okay.
We launched it on 6th of January.
Ah, okay. Okay. So that's what I was missing. Okay. So then since then, basically, now it's like a whole new world because 10-minute blocks are
people loved it.
Not really an issue, it sounds like, anymore.
Yes. So you deposit. The experience is very similar to Hyperliquid. Okay. So you deposit your BRC20 token or Bitcoin. There is a slight difference with these depositing. When it's BRC20 tokens, it's fully trustless. It's fully like exactly like Ethereum. But when you're depositing Bitcoin, we collaborate with Subfrost.
Sure.
So there is like still like a wrapping going on, but we abstracted everything away. Exactly like Hyperliquid. In Hyperliquid, when you deposit Bitcoin, they use another similar service. So from the Bitcoin, the native token perspective, it's exactly like Hyperliquid. From the BRC20 deposit perspective, it's exactly like trading Ethereum tokens on Uniswap kind of thing.
So January 6th was also like a big moment for you, right? Because it substantively changed the trading experience from the initial 6 ticker.
Yes. We did a Signet test, and around like 500 people tested it. It's a lot for a Signet. I mean, 500 wallets.
Who knows?
Yes.
Sure.
But like, it was very beautiful moment because after we released 2.0 in September, we got a lot of shit.
For not having this feature, essentially.
And then
ready to go.
when we put it on Signet, people like, whoa, like, this is a game changer. Like, we didn't get a single negative comment. Even like when people reported bugs and stuff, it was always in like a positive tone because there is a community that their needs are not met. The Bitcoin native asset, the BRC20 community, including Rune's community, their needs haven't been met. And then they were like, okay, 2.0 will meet our needs. And then 2.0 comes, and then their needs are still not met. So expectation reality situation.
Right.
That's what I meant with expectation management.
Right.
And then like we lost, like the momentum kind of cooled down. But like people stick around. Many people stick around because a lot of community leaders also saw the potential, especially some Chinese users who were quite bullish on the 2.0 upgrade. Like they understood, like 2.0 upgrade for BRC20, I would say 5 months ago, only like 1% of the population of users understood what it really was. Whomever understood, they stick around. Now it's like increasing because people are seeing like, oh, whoa, this is actually very good. Wait, like this is trading tokens on Bitcoin. I'm still on Bitcoin trading my tokens. And yes, like that's what BRC 2.0 upgrade is, to have the internet capital markets on Bitcoin.
The internet capital markets on Bitcoin.
I'm surprised you haven't heard about that before.
I haven't heard this term, internet capital markets on Bitcoin. This is not your term then? This is like a generic
I've been calling
term?
No, internet capital markets is a general term in the crypto world.
Okay. Oh, it is?
Yeah, it is. It is.
Never heard of it.
Yeah, because Bitcoin people are just trading the Bitcoin and holding it so far.
We're out of the loop, the Bitcoiners, on the jargon.
Yeah, internet capital markets is this, it's kind of, you remember the ICO craze, for example? It's like, those are like pseudo equities for companies, and like companies doing ICOs, raising like capital, and then there's the tokens. So it's very similar to traditional equity markets or like traditional capital markets.
Got it.
But this happens on internet. It's 724. Anybody can participate. It's permissionless. Depends on which product you use, but it's mostly permissionless. And capital forms between communities and moves around between products and tokens.
Huh. Okay.
So it's similar to normal capital markets, but on the internet.
So this, I mean, it's interesting because prior to 2.0, we didn't really hear this term being used.
Yeah.
Like this was not really a thing prior to BRC 2.0 and even the Bitcoin native assets space.
Yeah.
So this is an exciting development. What are you looking forward to in terms of internet capital markets development? Like, what are you looking forward to seeing there?
So in the broader crypto world, internet capital markets also includes RWAs, like asset tokenization. So another way of talking about this BRC 20 and 2.0 next chapter is positioning Bitcoin as the prime asset issuance layer, prime asset tokenization network. So this internet capital markets on Bitcoin, or this Bitcoin as the prime asset issuance layer, like all this stuff came out from talking to funds, talking to family offices, talking to people we know. Because when you say like Bitcoin native assets, like people get lost a little bit. So
like they don't even know what you're talking about.
People don't understand it. Like only a very small amount of people understands it. But I needed to come up with a better way of communicating these ideas, because we're writing a big narrative. We're talking about $1 trillion market opportunity here.
With RWAs specifically?
Everything, the internet capital markets, not
internet
necessarily
capital
RWAs.
Markets,
It's
$1 trillion opportunity.
Community coins, RWAs, DeFi tokens, startup tokens, whatever tokens.
Where's that $1 trillion number coming from? Is that just sort of working under the assumption that, regular crypto markets are going to collapse?
I'm introducing another new metric there.
Okay, let's hear it.
We call it capital amplification factor.
Okay.
CAF.
Okay.
Okay. It's the total market cap of tokens on a network divided by the total market cap of the base layer.
Ooh, okay.
Excluding stables.
Okay. Base layer meaning like the value of...
Yeah, let's take Ethereum.
Okay.
So on Ethereum, this ratio is around like 0.75.
Meaning like assets over literally the value of Ethereum token total?
Yes. Like you calculate all the major assets, all the DeFi tokens like Aave, Uni, Curve, like all these tokens, market cap, you divide it by Ethereum's market cap, and the ratio is around like 0.75. Okay, because it's like you have this base layer token, and back in the day, before stables were much less, let's say, everything were paired against Ethereum.
Fair.
So Ethereum goes up, all the tokens goes up, Ethereum goes down, everything goes down, but there's always this like pool mechanics, let's say.
Okay.
Before Ethereum ICOs, it happened with Bitcoin in 2013 as well. Like all the shitcoin trading used to happen against BTC. You will trade the coins against BTC, not USDT, USDC, etc. But the capital amplification factor is you have this base asset, and then this base assets acts as a money that you can inject into another asset and create a pool depth, in a sense. You inflate the new asset, like you issue Uni token and you buy it with Ethereum, so like and pair with Uni Ethereum, so you have a new asset that is grown with the Ethereum itself. So you amplify the Ethereum's value paired with tokens on top.
Okay. And so, but it's interesting because
it's a way to create wealth also.
It's a way to create wealth.
Yes. Okay. Yes. When used correctly, this is a technology. These like tokenomics stuff, it's a technology. It's going to create, it's been creating incredible wealth. It's going to keep creating incredible wealth. It plays a significant role of our transition into a post-scarcity economy. So tokens are good.
Apparently tokens are good. Wait, so but how does this directionally go though, right? Because a big thesis during the ordinals like broader boom, right? Like the 2-year period where ordinals were really ripping, 3-year period where ordinals were really ripping, arguably, ish. During that period, the core thesis by investors was that because Bitcoin was such a hugely liquid token coin, that would pump up the Bitcoin native assets.
So it's like but Bitcoin is the biggest, so its amplification will be huge. The capital amplification factor will be huge. That was everyone believed in, and that's still intact.
You think that's still intact?
Yes.
Because a lot of people have let go of that narrative.
Yes.
A lot of people have kind of thought that thesis actually doesn't hold, right? Because people who hold Bitcoin aren't necessarily going to get involved in all these trading activities.
Yes. So let me continue with this CAF.
Okay.
On Solana, by the way, it's 1.5.
Okay. Oh, wow. Okay. Yeah. Because Solana's all trading. There's more people just holding Ethereum for the sake of holding it relative to Solana is basically why that
I don't know. I don't know. I did a lot of shitcoinery on Solana too, but it's I don't know.
For whatever reason.
Yeah, for whatever reason.
Okay.
There's a lot of meme coin activity going on there. So
fair.
And there's a lot of billion-dollar meme coins. But I'm not going to go into much detail there.
Okay.
And coming back to Bitcoin, this number is 0.001.
So there's tons of room to grow, assuming that the thesis holds.
Yes. So we talk about the thesis now.
Okay.
And yeah, as you said, like a simple catch up to Ethereum means like 700 times growth for the whole ecosystem
of Bitcoin native assets.
Yes. So how do we do it? Before how do we do it? Why it didn't happen? What makes Web3 is the composability, programmability, interoperability. Like these are like 3 core concepts that Ethereum unleashed basically. And then like all other chains try to have this. Now like everything is programmable. But Bitcoin.
Until now.
So because it was beautiful when the early Ethereum DeFi days, it's like you provide liquidity, you lock that token into some other contract, you mine another token. This tokenomics, token design systems became much more elaborate. There are whole like token design engineers. I consider myself an amateur one. I took many courses. I've read thousands of tokenomics papers in my life in crypto. So I approach this as a science. Okay? It's a wealth creation and incentive alignment science. And you can create bombs with it too and kill a lot of wealth.
Okay.
Like what happened with Luna and its stablecoin, for example.
Fair.
Bad design, people lose money. Good design, everybody makes money. Bitcoin, Ethereum, Solana, Hyperliquid, like good tokens creates wealth. And some of these creates wealth on a global scale, like Bitcoin again. So how do we, going back, like why this, because these 3 pillars didn't exist, the programmability, interoperability, composability, the Bitcoin, the capital itself didn't stick around. There is nothing to stick around. It's just meme coins. There are like 4 or 5 company tokens in Runes and BRC20. And you can't even do programmatic stuff. You still trust the team that they're going to send your vest. Some teams did with like trusted custodies for their vestings, etc. It's like you're trying to, like someone goes with their like electric vehicle and you're still trying to.
Bad design.
Yeah. Bad design. No design. So the capital didn't stick around because there wasn't anything for it to stick around. And what is it? What does capital stick around with? Let's look at the Ethereum world again. AMMs are a significant pillar. People liked pulling these tokens together and creating these liquidity pools that provides provides for trading or lending and borrowing applications, algorithmic stablecoins, flat coins, like a lot of innovations built on top of a lot of primitives. And like, for example, AMM is one of those.
So your core thesis basically is that programmability as well as composability and interoperability are sort of the keys that could potentially relaunch Bitcoin native assets as an asset class, essentially.
It can. I don't know if it's enough to like do it, but there is a lot of interest around it. There's a lot of it's a very new thing on live. We can talk a little bit about it. We can talk a little bit about like there is liquidity mining going on right now on Bitcoin, for example. It launched around like a week ago or something.
We'll talk about that. We will circle back.
So to like close this, why it didn't happen, we didn't have this programmability, interoperability, composability. Now we have with BRC20. So BRC20 is not a raw token protocol that kills the little turtles in the sea, Erin, with the post-its, etc. It's a much more evolved protocol that can have smart contracts on Bitcoin. It basically, Casey describes it as JSON blobs, which is exactly true. We inscribe smart contracts on Bitcoin blockchain. Bitcoin handles the data availability and order of the transactions. And then the computation happens with the indexers, just like ordinals and runes.
So how have the markets responded to this?
So there wasn't much market left to respond, to be honest.
They were already long gone before we launched this.
The runes are dead, ordinals are dead, like very small amount of people remained around. People scattered. Everybody scattered. The community scattered, etc. But interestingly, BRC20 Chinese communities endured.
Specifically, Chinese communities endured.
Yes. And I spent my last 6 months mostly interacting with Chinese communities, and I learned a lot from them, especially their offline approach is significant. They do meetups a lot. They're not on crypto Twitter. They're mostly on private chat groups. And they have this, they can come together and stick together much better than the Western world. So there is Omega community, Pi community, FIFA community, couple other tokens that I haven't met with. There is BeatSwap. Now there is the Nutkin community. These communities are hundreds of people coming together around the token and doing things. So there is still a lot of life going on in the BRC20, but you can see it if you have a good data analytics solution. We have our own things too, we observe what's going on Bitcoin.
And it sounds like it's being propped up by these very primarily Chinese, but more to the point, just sort of diehard niche communities that are kind of holding this together and pushing this forward still, despite the sort of market downfall post Runes launch happening vibes.
They love Bitcoin.
They love Bitcoin.
They love Bitcoin.
And
it's also what makes Bitcoin native assets special is that you can trade them directly against Bitcoin. That's one thing that Layers 2s miss as an insight. Here, my service to you, Layer 2s. People want to use their Bitcoin permissionlessly, and they wanna use their Bitcoin without KYC or multi-sig setups, that their Bitcoin can get frozen. There's a lot of Bitcoin users in China that they don't touch Lombard BTC, for example.
They won't.
No.
They won't.
No.
It's just an ethos thing for them, or they just have distrust. It's just not happening.
Yeah. I mean, yes, they're no, I want to use my Bitcoin. We got, that's what made BRC20s and Runes special for the Chinese community, because they like shitcoining, they like trading, not just shitcoining, but if there's a good use case, they enjoy investing into these assets, and they do it together. So it's kind of my kind of current understanding is Chinese communities is 100 fish coming together and acting as an investment firm.
Okay.
And then invest, you have these VCs or investment capitals, etc. Couple people coming together, raising some money, and they allocate the money. But in China, retail, because they can come together and stick together, they can do it without these formalized entities as well. That's something I respect a lot, and that's something I learned a lot. One of the founders of the Omega team, they always talk about consensus. And these are not 20-something degens. These are grounded people whose They understand the crypto very well, deeply, and they understand markets. They know how to invest. They understand this capital amplification. You put the Bitcoin into another asset, and then like you create another asset that can hold value. So they always talk about this consensus, not the blockchain consensus, but consensus as a community.
Social consensus.
Social consensus. West lacks this.
Who does?
Western users.
Oh, Western users
Western
lack this.
users lack this attribute, let's say. That's something I observed sitting in the middle of a lot of things. Because like we talk to US teams, we talk to European, we talk to a lot of people around the world. And that gives a beautiful, unique perspective to observe the differences between communities and their cultures.
So you think culturally, in some ways, Chinese investors have an advantage in terms of like the way that they sort of invest together?
It's very natural for them to come together and do something together. Because it's like if you think about a token, what makes the token grow? The amount of human attention and human capital going into the token. So if you can come together as 100 people easily because everybody's accustomed to do it, like it's in the culture to do it, then you can do it much more easily. That's why there's still a lot of BRC20 tokens that are alive and kicking and has active communities and can hold their 100 million to 100 million market cap values.
And you would say it was about, I think you mentioned on the car ride over here, it's 80% of BRC20 users / assets?
No, it's our users.
Oh, BRC20, 80%
best in slot,
best in slot users.
Yeah, like the website traffic, all our other services, like 80% of our users
are coming from China.
China, Singapore, Hong Kong, Taiwan, Japan, Asia.
Broadly.
Yeah.
Do you think that
Asia
that
is front-running West again.
Do you think that number holds true for BRC20, the asset class, or is that hard to know?
I think it holds.
You think it holds?
Yeah.
And that's always been the case. It's not just a 2.0 innovation.
It's like Ordi, Sats. These are all like Chinese communities coming together and putting a lot of their self-custodied Bitcoins into these assets. China pumped BRC20.
I mean, this is the news. Have heard this news, but it makes sense.
I also heard those news, but in the last 6 months, I met with many of these people.
You're seeing this firsthand. You're like,
and I've been talking to them on a personal basis. Like we become good friends with some of them, and I learn a lot from them. I've been in the crypto for more than 10 years. And there are similar people which much more experience because they're much older than me.
Interesting.
So they have business experience, they have crypto experience, they have money, and they know how to do the token things.
It's interesting that you mentioned that they're older too, because I think generally speaking, people assume that people who are, seriously invested in crypto do skew younger. I think that is a data set.
Not in the
Western
Bitcoin
users.
sense, I think, because Bitcoin investors.
But for crypto, right? Which I
for
think
crypto,
a lot of, if you think about BRC20 or Bitcoin native assets, it's much more, it behaves more similarly to non-Bitcoin crypto in a lot of ways, kind of like degen vibes or whatever. And that's something that we associate with younger users. So it is interesting that they're older and kind of you're mentioning kind of this more sophisticated actor.
Yeah, they keep sharing videos with us. And you heard these Chinese aunties meme?
Uh-huh.
It is real.
It's real.
Yeah, ladies, I'm trying to be kind or I don't know how to call it, but yes, aunties on their phones with their OKX wallets buying and selling BRC20 tokens.
Wow, that's amazing. I think what's the the Chinese grandmas is the big Telegram group that I remember that was very active in the ordinal space.
In Las Vegas videos, sometimes you see a lot of aunties on these slot machines, brainless, they're just spending their money. Chinese aunties hits different.
It hits different.
They're
smart.
They don't do this.
Yeah.
They're much smarter.
They're much smarter. They're sophisticated.
And they have money.
Interesting.
They don't play with pennies.
They don't play with penny.
Yeah.
Interesting.
So it's from an entrepreneur perspective.
Right.
This is my third company. And I'm talking about 3 years ago, 2 years ago.
Right.
I see a user base demanding applications and better tooling openly, but nobody meets their demands. And instead of trying to meet the demand and build for the community, build for users, everybody tries to do their own thing. I'm going to write my own protocol. I'm going to launch my own layer 2. It's like people are approaching from this.
Well, they're doing the classic tech thing, which I agree is a huge problem, where they're build interesting, cool tech without actually having a market for it, as opposed to building tech for the market that the market is actively asking for. And this is sort of
the latter is a better
issue.
way.
100%. I think this is a core issue in the development of crypto digital assets products broadly. All right, guys, I want to take a quick break to thank you for watching and remind you to click the follow button on my profile if you want more Bitcoin technical deep dives like this. I also want to give a shout out to my partners for making the show possible. My leading partner, Best in Slot, just released the programmability module for BRC20, making the execution of smart contracts possible for the protocol. I know that's been long awaited by the BRC20 community. Alongside this release, Best in Slot put out what is arguably the most sophisticated DEX for trading Bitcoin native assets called Coin Cooker, which I also highly recommend checking out if you want to dive into the BRC20 trading game and get started executing smart contracts on Bitcoin. I'd also like to thank Cetrea, building one of the leading implementations of a BitVN-style bridge for Bitcoin. Cetrea is building what I think could become the canonical Bitcoin rollup, enabling programmability, scaling. Really anything is possible with a trust minimized bridge, which is the unique value prop of these BitVM-style rollups on Bitcoin. Lastly, I'm thrilled to announce my newest partner, Spark, which is the leading state chains protocol on Bitcoin. State chains builds upon what was made possible by the Lightning Network for payments, but without the liquidity constraints and the UX challenges that often make self-custodial Lightning impractical. Spark is also led by one of the leading payments infrastructure teams on the planet, including founders from PayPal, Facebook. They're incredibly well positioned to turn Bitcoin into a true institutional standard for payment systems around the world, and I couldn't be more excited to support what they're up to. All right, on that note, let's get back to the show. Kind of just circling back, you had mentioned when we were first started talking Adderrels specifically as a big project. I'm curious if you could share, there was some drama around Adderrels recently. Maybe this is where you had some personal growth moments.
Yes.
Could you give a little TLDR for people who might be curious about what exactly happened there?
So
this was the biggest project on BRC 2.0 out the gate.
Yes, I would say.
Okay.
Yeah.
Okay.
Not anymore, but it was.
It was.
Yeah.
What happened?
So to start with, we say interoperability is required too, right? So we made the 2.0 upgrade semi-interoperable with ordinals.
Okay.
Okay. We introduced ordinals staking using Bitcoin lock scripts. Fully trustless ordinals staking, basically. And Adderels were one of the early projects that understood what it means. It means you launch a collection, you build a community, you make people stake the collection. When people stake, supply decreases, number goes up, creates hype cycle, and then you promise a token pro rata to your lock duration.
Okay, I'm with you.
So Adderels leveraged this mechanic first. It was a $14 mint. The price went up to $3,000.
Wow.
And it gained a lot of attention. So people locked their Adderels to mine the Acorns token. And as another thing that BRC 2.0 introduces is now that you can have AMM trading, much better trading. So they also did a public sale on their website, and they raised 14 Bitcoin. They sold 10% of the token supply for 14 Bitcoin, and that Bitcoin were promised to be paired with another 10% of the supply of the token and put it in a liquidity pool.
Okay.
So especially the Chinese community were very enthusiastic about this. Whoa, like now I can use my Bitcoin in liquidity pools and like do all these kinds of like DeFi stuff on Bitcoin, and it's BRC20. It's not like a totally unheard of new protocol. So it was a very clear investment thesis. That's why some of these communities got deep into it. Because those were the people who were in ORDI, who were in SATs, who were all in all these tokens that pumped to like a couple $100 million in BRC20.
And they were waiting for this. They were waiting for this kind of like technical.
Of course, like it's their capital also that didn't stick around because there wasn't much things to stick around. And now that this like protocol upgrade is coming and OKX is included and Unisat is included. Best in Slot wasn't known that much back then, but like we established a good credibility so far because we've been shipping nonstop. And we're going to keep shipping nonstop.
Keep shipping.
So this community in like 15 hours or something, they raised this like 1.5 million liquidity pool. And then that's also like where the expectation reality topic comes in. Like everybody expected like there is going to be like an amazing AMM trading experience right away when the 2.0 launches. And one of my mistakes was that like we didn't talk about it. That hey, like these things, I mean, we talked about it. These things are going to come in like in 3 months, 4 months, but people don't read.
It was like buried somewhere in like a Twitter post announcement. No one really knew what was going on.
Exactly.
Read the Twitter announcements, you guys. Helpful information.
So, and then now there is this founder holding 15 Bitcoin. And then there is the first AMM came out, the cat swap came out, and ProBTC came out. And he only puts like 1 or 2 Bitcoin. And then people are like, why are you not putting everything? People also don't like the experience that much. But like the founder also says like, this sucks. And then he says like, I want to move to Solana.
So he was withholding Bitcoin that he had committed to putting in this liquidity pool.
Yes, that's one thing with the thing. Like the community sent the money to his wallet without questioning, hey, is there like a multi-sig, like who holds these funds, etc.
Just centralized control by this one guy.
Yes, one guy.
Yikes.
And then like we don't deal much because we have a lot of things going on. Like we're developing together with OKX, with Unisat. There's all like this work going on. We have actual business development work going on in the back end.
And it's not your project. I mean, you built you were building the protocol, but the projects that are built on top arguably are not really your responsibility.
Yes. Yes and no.
Yes and no.
Because it's also about the community. It's like the technology is only half of the picture. The other half is the community. Like I can't just turn our backs to the community that is the most active.
Of course.
On this like phase 1 of the BRC 2.0.
But you've got like all these things going on, and it probably didn't occur to you at the time, even though obviously in retrospect this was a big risk, that this guy could renege basically on his commitment to the community.
Yes. I mean, we also have like I also didn't expect it. Like it was like a very surprise for us too, because it's not like an anonymous person. We have we signed a contract with the person. We have the KYC info and everything, but ours is a service agreement.
Right.
And we have a service agreement with 20 other teams. Because like we're bootstrapping the ecosystem. Not many people know how to like work around this thing. So we're helping teams build their products. We're helping teams with their like token stuff. Basically like technology partner. And we do this with like many teams. So we're not like on hands on like with one project. But this one became a mess.
Okay, so he
became a mess
basically-
because like people started to send us messages, hey, like this guy is gonna rug, a lot of like Chinese anger going on. Like I talked to founder, he's like, hey, I'm receiving death threats from the community, like they're calling me, they're harassing me, etc. And I'm like, okay, we need to intervene, like let's see what's going on. And then like the situation becomes like very messy, very fast.
accelerated. So how did the community respond to this? Because at this time, this was the largest community for BRC 2.0, basically.
Yeah.
Including, like you said, some very serious Chinese grandmas who do not play with pennies. Like, I would not fuck with them. So what happened? I mean, like, how did the community handle this?
They were pissed, of course, in the beginning. Because then like the guy deleted like tokenomics stuff, announcements and tweets, and people were like, hey, like this guy is gonna rug. Like this is the
oh, that's how they knew he was gonna rug, because he started deleting tweets?
He started to delete tweets and stuff. So community, like he's gonna rug, help, best in slot, help. Like we can't do anything. You said you know who this guy is. Like
that maybe is also...
you promoted them. Like we promoted a lot of projects because it's like a new ecosystem, and of course we're gonna promote all the projects that wanna do things. Not all of them, of course. Like we did like a KYC with all the products.
This is also probably a reason, though, that you were maybe not held responsible, but that the community expected something from you. Is that he had KYC'd with you? You were the only one who knew who this guy was.
Yes,
that makes sense. Okay.
Yes. So we talked with the guy first. A couple people from my team, like one Johan, you know him. Like he talks with the guy, and then like I talk with the guy, and like on the phone, like it was very calm at the beginning, because it was like, look, I'm gonna buy a house with some of these funds because I need to put a house because I have 5 kids, and like. I did this project to buy a house, so I'm going to take this from the money that I raised for the LP.
Oof.
So he has his justification.
I mean, that is a poor justification.
And he's talking from like a perspective that like, I need to provide for my family.
No, doing something illegal for your family is like not okay.
But it became like, and from my perspective, it's like that's a very colonial behavior. It's like, you're going to take 500 families' money to provide for your own family?
No, he's engaging in criminal behavior
to
quote unquote provide for your family.
Exactly.
Like that's not reasonable.
Exactly. And then like he shared some tweets, and then like he deleted the tweets. And then like I tried to like find money for his fucking house so we can buy the project off of him to save the community. I talked to like a couple people that I know, like nobody wants to touch it.
So this is like an ongoing issue. He's basically rugged. How does the community respond? Like, what is the community doing to manage this amongst themselves?
So we also don't know much about this community back then.
Okay.
The community behind it. And like we start to exchange a lot of messages during these events. And then that's how we get acquainted.
That's how you get what?
That's how we get to know each other.
I see. Which is good, which is probably great for you.
If he did one thing good, it was like introducing us with that community, like make us come together. That's one thing. But anyways, like they're like, look, our community invested a lot of money into this project. We're gonna keep running it, like fix it somehow. But the situations got very complex because he shared a tweet that says, okay, I'm going to take 5.5 BTC and then send everything to best in slot. Okay.
Was that true?
Yeah.
Oh, okay.
So, and looking back, I'm like, oh, it would have been good if we maybe like, because now he's taking all the money. But then the lawyers came in.
Okay.
Like a couple people wanted to sue him. They came to us because we have the KYC.
Right.
And then communities telling us things. Like the project, we're talking to the project founder. There are now like the lawyers involved. We have our own lawyers involved. we have like an in-house lawyer. We have like other lawyers. The situation became very messy.
It sounds like it.
Okay. And it was like on one point, I'm like, this is a unique experience.
I remember you saying that to me briefly, like in a friendly chat. You said, I am personally growing in this experience.
Yes. And
but you had mentioned that the community had some sort of like creative technical ways that they were handling this.
And then
as well.
like the community at some point, like the legal process, it still continues. Like I can't talk much, so I'm not going to go much. But like the community was like, okay, let the legal process continue. We're going to fork the token. Okay. Because the founder held like 10%, 12% of the supply too, because that supply was meant to be paired with the liquidity.
Right.
And he had his founder tokens, and all the team wallets also like were paid right away at the TGE. So the community was like, okay, there's a treasury, but there's no treasury. Like, like a lot of things came to the light after like on-chain analysis went on, etc. So what the community did, they mapped all the tokens, okay? They took the founder and team tokens and the tokens that were reserved for liquidity. They forked the token, so holders get 1-1, and then they get around 25 to 30% of the supply. And they're like, we're going to put it into a liquidity mining. We're going to start the first liquidity mining on BRC 2.0.
Okay, so this is super interesting.
So they took a city situation and they created I would say a winning situation, because right now they have like 1.5 million in the liquidity pool in 1 week since they started the liquidity mining.
When did this fork happen? Like how long ago was the fork?
I think 2 weeks ago.
2 weeks ago.
Yeah.
Okay, so the fork happens. They create a liquidity mining pool with this?
So we need to talk a little bit about BIS-AMM at this point.
Okay.
Because it's what you can do, because it's like exactly like Ethereum. You can deposit it into BIS-AMM. You can trade. Also, you can provide liquidity. You can add liquidity to a liquidity pool.
Okay.
And then that your pool position is represented as a LP token, we call it. It's like an old thing from the Ethereum world, but these are new for like the Bitcoin stuff.
Right.
So you have a token that represents your liquidity position in the pool. You can withdraw that from BIS-AMM and you can do whatever you want with it, like locking into a contract that every day disseminates a certain that token that they took from the founder and the team.
Well, and just like back up for a second, because for the Bitcoiners who might not understand, right? So essentially you can take these liquidity pool tokens, these LP tokens, you can do whatever you want. But one of the applications that is, it sounds like is commonly executed in the Ethereum land is using LP tokens and putting them into mining pools is what they're called?
It's called liquidity mining.
Liquidity mining. Okay.
Yes.
And just like explain that, like TLDR liquidity mining for the Bitcoiners.
So in the Bitcoin world, mining is proof of work, right?
Mm-hmm.
You have the ASIC machines doing the computation. There's the work, proof of work. So that's mining. The reason this is called the liquidity mining is because you provide the liquidity and then you lock it into a smart contract and get more tokens for providing liquidity.
And these rewards could come from anywhere. Like it could just be a project that creates this and is like, okay, we're going to disseminate our token to this is how we're going to disseminate it's basically a distribution mechanism for any pool of tokens. Also
incentive alignment, also bootstrapping your own protocol.
Right.
Also bootstrapping liquidity.
It's a distribution mechanism for
it's
new
one
tokens,
of the
old tokens, whatever.
It's one of the core mechanisms that kickstarted the DeFi summer on Ethereum.
Really?
Yes.
Interesting. Okay, so this is an old mechanism. This is like a very common.
This is the mechanism that created the first run of the DeFi tokens on Ethereum.
And it kind of makes sense as I'm thinking about it, because it's it reminds me, it has sort of like a fair launch kind of quality to it. If you want to distribute tokens, like if you have tokens, if you're trying to raise money with a new token you've created, or if you have these Acorn tokens that you've just forked away from the guy who rugged you. You know, if you have a pool of tokens and you want to distribute them to a community fairly.
And you want to have a liquidity pool because the guy took the money that were supposed to bootstrap the liquidity pool. So you can trade these assets easily without market makers.
This feels like a fair way to do it.
Yes. So they did the first token fork on, I would say, in the Bitcoin native asset space.
I would say I've never heard of a token fork before.
Yeah. So the community literally forked. They're like, the founder fucked up. We also don't like the team because you were the team that were supposed to do things good. So we're going to fork.
It's so interesting.
As a community because we're the one bringing the money.
It's so cypherpunk also in a way too, in the sense that okay, there's legal battles are going on. Who the hell knows what's going to happen there? The judicial system may or may not work. It's going to be ongoing and annoying, no matter what. But the tech, we can sovereignly handle our shit with the tech.
Yes.
That's super interesting.
Yes.
Okay. So, and this has been going on now. This liquidity mining situation's been going on for a couple of weeks.
No, 10 days.
For 10 days?
No, not maybe a week. The liquidity mining started a week ago because there's this amazing Uzo team, that one of my favorite teams in the 2.0 space. They are the ones who forked the token that helped the community.
How does a fork token work technically?
You create a new ticker, you create a new token.
Okay.
You airdrop 1-1 to all the holders and exclude the founder tokens.
Got it.
And put that into a liquidity pool. So now all the tokens are in circulation. Nobody controls. It's fully fair.
How did that affect price? Because I'm sure Adderels dove off a cliff.
They forked it and then they sent it to zero, the Acorns token.
So now Acorns token basically no longer exists, and it's this.
It exists. No one can close
zero.
it. We can't stop trading.
And
there's
no liquidity. It's just done.
It's permissionless. Dead. It's he can come out and hey, I was hiding under a rock. I'm gonna put this money into a liquidity pool now.
The criminal can try to resell it if he really wants to.
But they sent it to zero. Now they're they took the reins to their own hands and...
So what's the new token called?
Notkin.
Notkin. Natkin? No.
Yeah.
Notkin.
Notkin.
Okay. Okay. So how's so Notkin token, that basically therefore was this essentially new token that started at zero and is, I assume, has got to be ripping right now.
So this is what happened. It's basically started at 5 million market cap, crashed to 2 million, went up to 10 million, went down to 3 million again, and then went up to 8 million again. But during all this up and down, the liquidity mining started, and there is around, I'm not sure of the number, but there are more than $1 million right now.
In the liquidity pool? Liquidity mining.
Yes. They provide liquidity and they're also mining more Notkin tokens.
They're mining the Notkin tokens.
And this ratio, liquidity to market cap ratio, it's one of the highest in the crypto space right now. Because you don't have 5 million market cap tokens with 1.5 million liquidity pools.
Is that a mechanism of liquidity mining? Is that part?
No, it's screams undervalued basically.
Really? I mean, that maybe makes sense. But that's not. I would think that liquidity mining as a mechanism kind of promotes that, kind of supports that. Or
yes,
no?
Of course. It's liquidity mining is used to bootstrap liquidity for the token to trade without market makers or centralized exchange listing or whatever.
Is it still just the core user base of Chinese grandmas who are in this project, or is this
there are a couple US people too?
I was gonna say, is it attracting new users? This whole
people are looking at it. Many people are sleeping on it. It's exactly how it feels like. I feel the same emotions what I felt with Ethereum DeFi Summer.
Really?
Because before Ethereum DeFi Summer started, before we called it DeFi, there was a 30 people Telegram group which grew to hundreds. It's where the DeFi term was coined in that Telegram group. So I was very early in liquidity providing on Uniswap, liquidity providing on Curve. It's like, whoa, very interesting. So I was like amazed. And my dad is a banker. He worked at banks for all his life. So I like traditional finance topics too. And I'm explaining him like, Dad, like this leasing topic, now we can do it without a bank. Borrowing and lending, like we can do it without a bank, just with code, just like Bitcoin. And he was burned with Bitcoin because I was telling him like, Dad, let's buy some Bitcoin. It's like $1 now because an exchange crashed and the price went down to $1. Let's buy Bitcoin. He was like, what the fuck is Bitcoin? But with the DeFi, he understood as a banker the potential. So he put in money for the first time into crypto before DeFi summer started as a DeFi summer.
So this is like a really good
moment. So now we're having the similar primitives forming on Bitcoin.
And this is sort of just like a moment of validation, really, for DeFi. I mean, this is maybe another silver lining of this like criminal rugging is this validation of all of these like new DeFi activities that are kind of actually happening on Bitcoin in a real way that previously only existed.
It was going to happen in one way or another. This is like the drama is the sauce.
The drama makes it. It always happens through drama.
It's the story. It's the drama. It's I'm very amazed and I'm happy that such a community is doing things on a protocol that we are developing. They're like 99% of the communities would vanish after such a devastating rug blow.
Oh, and they held in the Chinese.
They held in, and they okay, first fork.
So resilient.
First liquidity mining.
Yeah.
And then
let's go.
One of them was like, we're gonna make him sad, the founder, by pumping this thing to the moon.
I mean, I completely understand that sentiment. Okay, but this is from my perspective, the way I see this is this is validation for just increasing DeFi activity and increasing abilities of Bitcoin to handle these kinds of activities.
This is interoperability, composability,
programmability.
It's because it's
the trifecta.
There's a token, there's a liquidity pool. You provide token into the liquidity pool, merge it with Bitcoin, and then you take the LP token. You go to another team's website. You put it into another smart contract, and you get tokens. And then this catched a lot on Ethereum, but it took around 6 to 8 months to fully develop. We're talking right now, it happened 10 days ago on Bitcoin. That's the conversation we're having right now.
And these types of, I think, I don't even know if they really truly constitute innovations because they are happening on other chains. But these kinds of developments and advancements on Bitcoin are only going to continue.
Capital amplification factor, baby.
Capital amplification factor. Okay, so this is a good moment. So this is what the DeFi degens are doing with this protocol right now, right?
Yes.
This is what's happening with the DeFi degens.
And many BRC20 communities are getting ready for it because phase 2 is coming in a couple days.
And that means,
at the beginning of February,
and
all BRC20 tokens will be able to do all these kinds of stuff.
So it means you'll be able to do this with Ordi, you'll be able to do this with Sats, all of your favorite BRC20 tokens. Are
Ordi becomes a fee token for Ordi pools. You can have a shitcoin Ordi pool, Ordi BTC pool.
Ordi is still the highest market cap coin, period, right? Probably?
I don't know.
We're actually not sure. We should check that. I'll put it in the notes. I'll put it in the show notes. Okay.
I don't know. But one thing that excites me a lot is also trading Bitcoin against USD on Bitcoin in a trustless and permissionless way.
This is a good segue into what's happening in TradFi with BRC20 or what the potential vision is in terms of the broader financial markets, right?
Yes.
For Bitcoin. Let's talk about that. Why don't you jump in? Because you had mentioned specifically, you were one of the reasons why you weren't, focused as much on the Adderrels situation from day one was because your guys are doing a lot of traditional BD right now in the finance world.
Yeah.
What are you focused on there?
Yeah. It's very obvious asset tokenization.
Asset tokenization.
Asset tokenization.
Is that like, would you say that that's like another way of saying RWAs?
Yes.
Or, okay.
Yes.
Okay.
RWAs, asset tokenization.
Okay.
You can call it like internet capital markets, even like encapsulates that term.
Okay. And who are you talking to? Who's interested in this? Like, how are the traditional finance people responding to this?
Yeah. So interestingly, we have amazing inflows of asset tokenization on Bitcoin. We're gonna like make more announcements. These are still like deal structuring phases, but we have a joint venture in US going on. We have a joint venture in Switzerland going on. We're gonna bring tokenized real estate on Bitcoin, traded against BTC.
Wow. Okay. Which is unique and different. I mean, no one is doing this traded against BTC.
Yes.
So real estate will be likely the first real world asset to be tokenized.
This is
Bitcoin?
some of our business partners. We're also like talking with family offices and some capitals. They want to do it, but there's a lot of questions around how to do it. And when we talk about like we're tokenizing assets on Bitcoin, that's the real BD for us right now. It's not a matter of technology anymore. And like also interestingly, people don't even question that is it technologically possible on Bitcoin or not.
Because they just assume Bitcoin is awesome and Bitcoin can handle anything?
They know Bitcoin. Bitcoin has the brand name. Bitcoin is accepted by governments. Bitcoin is a strategic reserve asset now. It's a digital gold and people trust Bitcoin. So when you say now you can have asset tokenization on Bitcoin, that these assets can trade against Bitcoin too, that immediately starts, oh, tell me more.
So basically what you're saying is like the TradFi people don't necessarily need or want to like deeply understand the tech and get under the hood. They want to work on a chain that they know, that they trust, right?
Yeah.
That they believe is the number one asset, the number one network.
Yeah.
And Bitcoin is the obvious one for
yes.
that, right? So like having kind of like no real like connection to like the underlying tech, Bitcoin is sort of the de facto winner by brand for these TradFi folks.
Yes.
Makes sense to me.
Makes sense to a lot of people.
It's a selling point.
I'm going to speak at the Tokenized Capital Summit in Hong Kong a couple weeks later because it's catching up. Like it's so easy to talk about it.
To sell Bitcoin.
Because I don't need to talk about like Solana or like smart contracts. When you say, okay, like you can tokenize assets on Bitcoin, people are like, whoa, like.
The Solana and Ethereum folks must be rolling in their graves.
No. They don't even like. This is super, super new. Like this is at the edge of the new wave.
But
that's why it's gonna hit very hard when the time comes, and that's why it's so early right now.
Well, there's no way that they're paying attention, right? Because in their minds, they do know the difference, right? Like the people who are like pitching RWAs on Ethereum and Solana, like they understand the difference between Bitcoin native assets and Bitcoin. And they may not understand the brand value that a team like yours is getting from pitching RWAs on Bitcoin, when in their minds, they're like, oh, Bitcoin native assets, BRC20, like kind of these like podunk metaprotocols on Bitcoin.
It's mostly a disbelief that this can be done on Bitcoin.
You think that's the issue? Is that people think that it's just not technically feasible?
It's easier for me to talk to family offices about asset tokenization on Bitcoin than people who has been on Bitcoin for 10 years because there has been so many claims that like we're going to do this with Bitcoin, we're going to do that on Bitcoin, etc. But none of them delivered. Basically like Casey delivered. Casey delivered.
Casey delivered. Props to Casey. Yeah.
Ordinals, such beautiful protocol on Bitcoin. It works. It's simple. Done. BRC20 takes this concept one step further. Now you have fungible tokens on Bitcoin. That's why a lot of people paid attention that, wow, we can have like assets on Bitcoin. And then everybody went away. That's where we come in. The upgrade, the 2.0 upgrade. Now it's programmable. You can do all of these stuff.
So you think people in crypto, like they, like in broader, like Ethereum, Solana land, like they literally just don't even understand what's happening technically at all?
No. It's like, it's not known much yet.
They just are like, that's not possible. Like that's their point of view. They're not even looking into it because they're just an assumption.
It's not in the radar.
Possible. It's not.
It's going to explode into radar.
Well, I mean, when they start waking up to the fact that like potentially these big like family offices and real estate owners and all of these sort of like traditional capital markets people are starting to tokenize assets on Bitcoin because they love the word Bitcoin. The word Bitcoin makes sense to them, right? They don't necessarily need to get into the weeds of Bitcoin native assets. These Ethereum and Solana folks are going to freak out.
I don't think so.
You don't?
They have a lot of momentum.
Okay.
There's a lot going on already on Ethereum, on Solana.
How do you see the split? Like in this future vision, what's on Bitcoin, what's on Ethereum? What are the roles of these different
Bitcoin,
ecosystems?
definitely, it's not the CAF. It's not 0.001 anymore. It's going to like increase.
So
for
just
sure.
takes more market share.
No, not that, like it's going to grow at least couple 100x.
But proportionately.
But I'm like proportionately, to be honest, I don't know. Like we're very early days. I definitely wouldn't say like Bitcoin will be the dominant asset tokenization layer. That will be over assertive.
Okay.
But I can easily say like Bitcoin is the prime asset issuance network that has a meaningful share in the RWA ecosystem.
Why do you say
we'll have?
Why do you say prime? What makes Bitcoin the prime?
Okay, that token? Prime word came from skeptics that they're like 10-minute block times.
Okay.
And expensive. Like it's going to be expensive because Bitcoin network can't process a lot of transactions. So
right.
If we have RWAs on Bitcoin, like let's assume, okay, like BRC20, we can have programmable assets now. So we can RWAs now, but Bitcoin is slow. And if it picks up, when it picks up, it's going to be expensive to do these transactions.
So this was like a
reference. That's why I say the prime asset issuance network, because if you're tokenizing a skyscraper that is worth $600 million, you don't give a fuck if you pay $100 or $150 or $5 for the transaction fee. It's meaningless in the scale. And if you're going to tokenize a shopping mall or like a 120 chalets in Switzerland, you don't care much about the transaction fees because it already costs a lot in the old traditional way. So, I mean,
this is a similar thesis to like the broader ordinals art market thesis, right? Like that, like Bitcoin will be the space for like the most high-end assets to be inscribed, period, right? You want the safest, most decentralized network to have the highest end asset classes possible. You don't really care about things like necessarily super high frequency trading or like all of these like crazy DeFi games necessarily if you're tokenizing a $600 million skyscraper. This is sort of a different use case. So it's like kind of the luxury assets you think will be on Bitcoin.
Yes. And also we were talking about like Rollup approaches, sequencer-based.
Right. You could
products.
Still do the trading DeFi thing.
You can still have hybrid approaches. Especially in the RWA case, it can't be like a runes token or like a legacy BRC20 token. It needs to be programmable in the sense that like you should be able to froze assets, or it can be in a way that only KYC'd wallets can interact with it. Every country has their different legislation mechanisms, regulations, and this RWA is a fully regulated ecosystem growing right now. Both of our venture partners are like almost all lawyers, like a lot of licensing stuff going on, etc. So, yeah, you need a base level of like programmability, and you also need to program it in a way that it is compliant.
How do you, like, what is your take on, like, when we will start to see RWAs on Bitcoin? Like, gun to your head, like, timeline on these kinds of big goals, big visions. Like, what do you think is realistic?
Definitely in this year.
You think this year we're going to see...
Ambitious goal would be 2020, in 6 months.
Oh, wow.
Ambitious goal.
And you think that likely, again, gun to your head, we don't know what's going to happen, but you think real estate would potentially be the first thing that we might see tokenized on Bitcoin?
I'm saying that because that's how our business development work has evolved into.
That's the direction it's moving.
The people we met with are in that business, so they want to do it for their own business, but it's gonna come in many shapes and sizes and colors, I think. This equity tokenization already happening on Solana, on Ethereum, financial instruments tokenization already happening on Ethereum, Solana. And there aren't many teams who are focusing on asset tokenization on Bitcoin yet. That's why we're just gonna keep running with our horse in the new horse year coming up to keep just building this business, because it's a big business. There's a lot of it's as an entrepreneur, what can else you ask for? They look for $1 billion markets. These are $1 trillion markets.
Love that.
Yeah.
Love that for us. Before we wrap up, I want to make sure that we touch on mining. Bitcoin mining, actual Bitcoin mining.
Yes.
Because this is a huge topic and something that has come up a lot. Even in the L2 conversation right now, you're hearing a lot of people having concerns about, the security budget and sort of how fees are going to, ultimately be paid to miners as the subsidy declines. Obviously, this was one of Casey's very early, kind of pitches for ordinals, was that, having metaprotocol style assets on Bitcoin creates a fee market. Controversial, complicated topic, but it's a thing. How do you see this all playing out for BRC20, and what kind of impact has BRC20 had up until this point on the fee market?
Yes. I'm talking specifically about BRC20. BRC20 operations on Bitcoin Layer 1 generated $520 million in fees for Bitcoin miners.
Wild.
$520 million extra revenue from on-chain activity, all BRC20 related, in last 3 years, almost 3 years now. Back of the paper math. I don't know if it's that called right, but anyways.
Yeah, back of the, sure.
Yeah.
Napkin math, I think is what they call it.
Yes, yes.
Napkin math.
Napkin math. This number is around 2% of miner revenue.
Okay, so 2% of all Bitcoin miner revenue came from Bitcoin, specifically BRC20 in the last 3 years.
Yes.
Do you know what percentage of that is BRC20 versus all miner revenue from the Bitcoin native asset space broadly?
If you include ordinals and runes, maybe it pumps up to 3%.
Okay.
But I'm talking specifically about BRC20.
But the majority of these fees are coming from
BRC20 has been the dominant. There has been runes activity as well, but it didn't sustain at all. So I'm speaking specifically about BRC20. And yes, to continue with, 2% of the miner revenue was generated by BRC20 in its raw form.
Without
no
programmability, no interoperability,
no liquidity mining, no composability, no nothing, just raw state. And now we're talking about tokenizing assets on Bitcoin. Okay? So 100x ecosystem growth plus the upcoming halving, I'm going to say at least half of the mining revenue can easily come from BRC20 related activities in the coming 4 years, 5 years. Why not? Why not? It's there is the demand. 1.7 million unique wallets. $7 billion on-chain trading volume on Bitcoin Layer 1. That shitty trading experience generated $7 billion volume. 520 million in fees paid to Bitcoin miners. I'm not a naive person that come into the Bitcoin world. Like this has been like on and on and on Satoshi Roundtable, on Bitcoin, like local meetups. I've joined to many. This business like a conversation. Some people even started to say like last year in Satoshi Roundtable, like two people actually like quite OG people with a lot of Bitcoin. They were like, oh, we don't have this problem anymore because governments are holding it. So governments will subsidize Bitcoin mining costs.
Oh.
I'm like, whoa, like we came from this like Bitcoin for the people, boo governments, to governments hold Bitcoin now and they're going to subsidize Bitcoin mining.
Nightmare.
My initial approach was like, what? But like when you think about it, we don't know what's going to happen.
Well, we don't know where the fees are going to come from.
That's like, okay, that's an argument, but I'm coming with numbers here, on-chain numbers. 2% of Bitcoin miner revenue generated by a memecoin protocol on Bitcoin. Now this protocol evolved and matured into a fully programmable ecosystem on Bitcoin. Why not 100x?
Well, when you do the napkin math, right, to use your term, it essentially like if you assume that like, okay, like the next bull market in Bitcoin native assets, if it comes, will maybe like 10x from what the previous, Bitcoin native assets bull run did. And then you kind of couple that with the halvening. I mean, like I would have said maybe 15, 20%, as an enthusiastic number. But
we'll see.
We'll see.
Even 2% is like significant because it comes from zero.
It's true. No, the miners liked it. They've told me so. Well, that is very interesting information. And you would say, just to wrap up, we have like 2 minutes left, but you would say that this is a significantly like different level of fee market contribution than say like most of the L2s you imagine will contribute.
Of course. This is like real economic activity happening on Bitcoin, the blockchain.
What do you see as, and this is a perfect place to end, but like, what do you see as sort of the role of L2s in this like long-term vision where, Bitcoin metaprotocols are going crazy? We have token asset issuance on Bitcoin. How do you see the split and like the different roles of metaprotocols versus L2s in this future that we're building towards?
I'm bearish on L2s.
Okay. Cautiously bearish?
I consider myself as a protocol product designer.
Mm-hmm.
And I think this app chain approach or like application specific rollups approach, which is a term 8 years old from the Ethereum space again, is a much better product building way than building a layer 2. Like our DEX is you can call it an application specific rollup on Bitcoin layer 1 that it settles to Bitcoin layer 1. Like general purpose layer 2s, Bitcoin layer 2s, especially without like true trustless settlement to Bitcoin, then I say, okay, like Optimism can say also like, I'm a Bitcoin layer 2, like any other layer 1 or 2 can say, I'm a Bitcoin layer 2. Especially the ones,
and they do say
especially
that.
like when teams use Bitcoin staking to secure a layer 2 and call that a Bitcoin layer 2, I'm like, that's not true. Like what Optimism or Arbitrum to Ethereum, that's a real layer 2. Using Bitcoin, the asset, as a proof of stake token for a proof of stake chain and calling it a layer 2 is kind of like a marketing thing. I think it's like
fair,
because BTC DeFi, like this BTC Fi, Bitcoin DeFi, oh my God, there's so much confusion in there.
There's like, a lot going on.
Whoa, it's so like
people really throw around that term.
A lot. For me, it's like doing this like liquidity mining stuff on Bitcoin layer 1. That's Bitcoin DeFi.
Hell yeah.
Wrapping Bitcoin and taking it to Aave on Ethereum and borrowing dollars against it, it's DeFi. It's not BTC-Fi. It's not Bitcoin-Fi. I think it's not but we're too much in the semantics now. I don't like going much.
It's not native Bitcoin, right? To your point.
Yeah.
Well, I think that's an interesting place to wrap up. Take in your notes on the L2s. I mean, it sounds like broadly what you're saying is like there's, app-specific chains might be like a little bit more effective for you as sort of a pair with metaprotocols, asterisks, if we get a trustless bridge. Is that fair? Unless we get a trustless bridge. And then maybe that changes the calculus somewhat.
I didn't understand what you said.
I was going to say, you said app-specific chains or
application-specific rollups.
Application-specific rollups or like
app chains.
You're more bullish on that. That might work better as sort of like a complement to this meta-protocol future that we're building towards.
Yeah.
Asterisks, unless we get a trustless bridge, maybe that changes the calculus somewhat.
Yeah.
Fair.
Yeah.
Okay.
It's also it's like that era of launching a chain with a token, that's the old game. Like there are 100 Bitcoin layers too now.
Yeah. And most of them
it boils down to like, how do you generate revenue? Who your users are? What kind of business development activities are you
Right, the winners will be the commercial winners.
Exactly. Where's the revenue? Show me the revenue. Like an actual company.
Famous last words, you guys. Show me the revenue. Thank you so much.